We had an excellent week in the stock market. Elections are finally over. Ant Group IPO got cancelled. Oil prices lower while gold miners talk about a huge uptrend in gold price coming up. We had huge earnings week and we're about to enter into another huge earnings week. So today I'm going to talk about all that and more. So please smash that like button and subscribe since it really helps my channel out. Also remember I have a completely free Discord group chat, which the link for that is down in the description below. Whoa, what a week. Definitely not as expected. The S&P 500 went up more than 6.5%, the Dow Jones 6.11%, and the Nasdaq almost 8%, which definitely was the best week in the stock market since April. After weeks and weeks of volatility due to the uncertainty of the elections, the stock market decided to soar during elections week. Apparently, investors did not matter much who was the president in the end, so long as an outcome to the race was clear. And don't think it was only the US stock market. The Stocks Europe 600 logged its biggest weekly gain since June. In Asia, the Shanghai Composite finished the best week since July, while Japan's Nikkei 225 had its best weekly gain since May. Also, we are seeing a split Congress, and historically speaking, that has been the preference for the stock market. Apparently, investors of the growth sector prefer a divided government, as it likely means that antitrust scrutiny could stay, the China trade war doesn't get worsened, and most likely taxes won't go up. But now that elections are finally over, it's time to focus on other things. When is the next stimulus package coming, for example? Now, Alibaba stock fell almost 9% as Ant Group's record $34.5 billion IPO is suspended. Ant Group is an affiliate fintech company of Alibaba, which is known as Ant Financial and Alipay. They were planning on going public this year and were the world record-setting IPO, which has now been suspended. Apparently, Ant has reported significant issues such as the changes in the financial technology regulatory environment, and these issues may result in Ant not meeting the conditions that any company needs to be listed. Also, Chinese regulators have been growing concerns about their fintech growing platform because apparently Ant Group loan offering services could be a risk for the economy. Authorities have been watching companies like Ant Group that provide bank-like services without formally being a bank. Now, talking about Alibaba, they reported a revenue growth of 30% year over year. They reported growth of 9% in annual active users and a 12% growth for their mobile monthly active users, but they reported a massive net income decrease year over year of over 60%. Their core commerce, which are all their Chinese retail, wholesales, logistics, international business, and more, grew over 29% year over year. Their cloud computing grew a whopping 60% year over year, digital media and entertainment 8%, and their innovation sector 10%. Obviously, Alibaba has been one of the biggest beneficiaries of the pandemic since all their segments have done excellent except for their food delivery business, which has a lot of competition at the moment. For my oil investors, oil price drops more than 4% below $40 a barrel as virus cases number increases. The US has had the second consecutive daily record rise, and we have seen a huge increase in cases in Europe as well. Obviously, this creates major concerns in the oil sector because a rise in cases means a negative demand indicator for oil, as we all saw at the beginning of the year where there was zero demand for oil and a lot of supply around the world with no enough storage. And now for my gold investors, apparently Wall Street thinks that gold will be a winner no matter who wins the election, since we will most likely see a fiscal stimulus program, which means that they will print trillions of dollars more, and all that positively affects gold price. Also, gold supply has been dropping since apparently gold miners have discovered a lot less gold than what they were producing, and also that when it is found, the quality is much lower. Gold miners also stated that in about a decade they will be producing 50% less gold than what they do today, and obviously that is massive impact for the price of gold, since that means that demand might increase or stay the same while the supply will decrease decrease, and that means that gold price will rise massively when that happens. Remember that the price of gold fluctuates depending on what people are willing to pay, and if supply is lower and demand is higher, then people will be willing to pay way more money for gold than what they pay nowadays. Now, California voters said yes to Proposition 22, meaning that Lyft and Uber can continue treating their drivers as independent contractors and not as employees. Uber, Lyft, DoorDash, Postmates, and Instacart spent over $200 million on the ballot measure to keep drivers classified as independent contractors, and one being the most expensive ballot measure in California. This is not the first time ride-sharing or food delivery companies have to fight against policymakers, and they have always been able to win or solve everything and continue as is. Also, they decided to spend so much money mainly to have a clear win and send a message to other states or countries that would want to do the same. Obviously, me as a Lyft shareholder didn't want them to classify drivers as employees because that would increase both companies' expenses by a lot. Also, I have done Uber Eats before, and I can say that for me it was way better like that because you can create your own schedule and everything. Well, if that law were to pass, it would drop drivers off the flexibility that they currently enjoy with Uber and Lyft, and drivers would have to work a minimum of hours weekly and wouldn't be able to get free time whenever they would like to. Still, both companies told voters that they would provide health insurance for drivers who work more than 15 hours a week, occupational accident insurance, among other protections. Now, Berkshire Hathaway profits rises boosted by investment returns. They reported an earning growth of 82% from $16.5 to $30.1 billion. Their quarterly results actually boosted because of their investment portfolio. As mentioned before in some videos, an accounting rule change meant Berkshire Hathaway to report their stock's performance as earning or losses, even if they didn't sell any shares, but stocks rallied a lot in the third quarter. Berkshire still has over $145 billion in cash and decided to buy back $9 billion in shares, bringing the total of stock buybacks to $16 billion for the year so far, meaning that Warren Buffett might feel that their stock is cheap, since at the beginning of the year they announced that they were only going to buy shares if Charlie and Warren believe its stock is selling for less than what it's worth, and also if the company has enough cash after buying back, which obviously that is the case. Now, we all have seen the massive marketing campaign around the 5G phones, and even more now that Apple has their new iPhone 12, 12 Pro, and iPhone mini with 5G in it. Obviously, Qualcomm sees 5G smartphone sales taking off, since they are projecting shipments of between 450 to 550 million 5G smartphones for 2021, which is at least double of what is expected for 2020, and in my opinion that was confirmed when Apple sold over 2 million phones within the first 24 hours of their iPhone 12 Pro and iPhone 12 release, more than doubling last year numbers. Obviously, Qualcomm will be the major beneficiary of Apple's 5G phones, and that would be reflected in next quarter's results. Now, last week we had very impressive earnings. To start, we had both biggest fintech companies, PayPal on Monday and Square on Thursday, reporting earnings. PayPal has 361 million active users accounts, a 55% growth in net new active accounts, a total of 4 billion transactions, and a total payment of $247 billion, a revenue of $5.46 billion, which is a growth of 25% year over year. This last quarter, they launched their Buy Now, Pay Later in the US and UK, which lets customers pay over time at no additional cost and is a win-win for customers and businesses. Also introduced the Venmo credit card and the most innovative feature to let customers buy, hold, and sell cryptocurrency throughout their platform. Now, for Square, they shattered analyst expectations on both revenue and earnings per share. They reported a total revenue growth of 140% year over year, while analysts predicted a 66.2%. Even though Square got hit hard by the pandemic because of the economic downturn and gross payment volume declining, investors have a lot of faith in the future of the company and its growth. Square is easily my favorite fintech stock, in which I started investing months ago when it was at around $102 per share, but have been adding more and more to my position since then. Then Upwork reported earnings on Wednesday and their stock had a massive run-up of over 26% after hours, which led to a 45% growth in total by the very next day. Their revenue grew 24% year over year and reported a smaller than expected loss, which obviously is excellent for the company growth, since analysts were expecting a loss of 0.8 cents per share while they lost only 0.2 cents per share and are predicting a 20% growth for 2021, which is slightly higher than what analysts are expecting. Obviously, as a shareholder myself, this is very exciting since I started investing months ago around July, and I'm very excited to see how the year ends for Upwork. Now, next week we have a massive earnings week as well, with Beyond Meat, McDonald's, Inovio, Nicola and Workhorse on Monday, Rocket Companies, Lyft and Tencent on Tuesday, my favorite pig insurance company Lemonade on Wednesday, Disney and Palantir on Thursday, and DraftKings on Friday. Now, if you watch my videos of stocks to watch in November, you know that Lyft was in that list. For them, analysts are expecting a revenue decrease of 32.60% for 2020 and a growth of 47% for 2021. Even with the pandemic, Lyft maintains their goal to be profitable by the end of next year, 2021, which impresses me a lot. Then for Lemonade, which had an excellent week since their stock went up over 20%, I'm really interested to see their performance and growth for the quarter. I do love that they are trying to disrupt a dinosaur industry with a very innovative tech-driven company that is trying to make people actually love the insurance companies. I do have to say that I will post a video analyzing their earnings and showing some pictures on how the insurance works, since one of the Discord group chat members uses Lemonade as his insurance for his cat and has provided a ton of information. Hope you guys really enjoyed the video. Please smash that like button and subscribe since it really helps my channel out. Thank you and see you next time.